Welcome to another edition of the Market Review, where we discuss developments in the financial and capital market as it affects the economy. Today, we'll be looking at the recent first quarter 2021 gross domestic product report on Nigeria's economy, which showed that it sustained a recovery from recession, growing at 0.51%. We want to know the implications of this for the Nigerian capital market. And with me to have this conversation is Professor Uche Uwaleke. He is a scholar and professor of capital markets, also a lecturer at the Nasarawa State University in Keffi. Nice to have you on the show, Prof.
Thank you very much, Ekon, my good friend. It's my pleasure.
Thank you very much, Prof. So let's first begin with the gradual economic recovery. First, in the fourth quarter of 2020, it was announced that we had recovered from recession slightly by 0.11%, but now it has gone further to 0.51%, showing that we're on that path to recovery. Let's place this side aside the fact that last week was bearish in terms of market performance. And I mean, investors lost 34.9 billion naira, and the NSE ASI dipped by minus 0.18%. Speak to us around the gradual economic recovery and the impact on investor sentiments.
Thank you very much. It wasn't just last week, Ekon. It's a trend that has persisted now since February, really. So I would say since then, the market has been quite cold. And of course, even this week, the week on week too, we have also recorded a negative performance, although a moderation from that of the previous week. Yeah. But having said that, I would say that the latest GDP report, which puts real GDP growth rate year on year at 0.51%, portends hope for the capital market. It bodes well for the market in the sense that against the backdrop of some predictions that the economy was going to experience a V-shaped recession. I recall someone had said the recession this time was going to be V-shaped, in the sense that the economy was, not V-shaped really, W-shaped. W-shaped means after recovery, it will also go down again, okay? But what we eventually saw is V-shaped, meaning we are out of it. So the latest report by the MBS, 0.51%, further moves the economy away from recession. So I think it's a good development, and it's something that is cheering for investors, particularly, foreign investors who have exited our shores on account of COVID-19. So it's cheering news for foreign investors. And of course, if you look at the exchange domestic and foreign participation report, you would notice that foreign investors have not been as active as they used to be. So I think this is a very good sign. Even to domestic investors is also, a good sign. But of course, that it's not just the GDP that influences investor sentiments. There are other factors, yes, including the exchange rate, the weak naira, the fact that inflation is still elevated, insecurity, and so these are the other factors that are choking, tending to choke investor sentiments. But by and large, the favorable and positive GDP report is a booster to the sentiment of investors, whether domestic or whether institutional, including the foreign investors. And if you also noticed the capital importation report by the National Bureau of Statistics for the first quarter of 2021, quite dismal, just $700 million compared to over $4 billion we saw in the corresponding period of 2020. So this will now signal that the economy is recovering, and I'm pretty sure that the capital importation report for second quarter of 2021 is going to be better than what we saw in the first quarter. This is one of the factors that will make that possible, because I expect to see increased foreign portfolio investments, in particular in Nigeria, partly on account of the fact that the economy is gradually, recovering.
Okay. And I like that part, that is the growth is a booster to investor sentiment, and of course that FPI should improve as we enter the second quarter, and the developments around the fact that domestic investors still continue to play a bigger now than the foreign investors. Well, let's look at the key growth drivers for Uche Uwaleke, and I guess you went through it, and for me, it's interesting, and that the manufacturing sector experienced growth in the first quarter after it had a contraction in the fourth quarter 2020. That was a good positive. Also, the fact that the real estate now back to back was on a positive growth rate after several quarters of negative growth. But what stood out for you as the key growth drivers? Would you say it's a combination of construction, manufacturing, real estate, agric, or which other mix would you describe as the key growth drivers that would not have implications for the market index?
Yes, when I talked about the GDP report exciting foreign investors, I was actually looking at the performance of the oil sector. Foreign investors are particularly interested in what is happening in the oil sector, for obvious reasons, because they know that this economy still depends on the oil sector. Over 90% of our forex, still comes from the oil sector. So the GDP report for first quarter 2021, if you noticed, was primarily driven by oil sector performance. The non-oil sector actually fell, okay, but the oil sector, even though it is still in the negative territory, but it moderated, considerably. The oil sector moderated from negative 19.76% to just negative, 2.1%, and that's on the back of the increase that was recorded in the average, crude oil production from about 1.56, million barrels per day during the previous quarter to 1.72 million barrels per day. So average crude oil production increased, as well as the favorable crude oil price. Oil price, one can say, has recovered. So a combination of increase in output, increase in oil price, helped the oil sector a lot. And anybody thinking of investing in Nigeria, whether portfolio investment or even direct investment, will be looking at the performance of the oil sector. So the oil sector helped a lot in what the results that we saw for Q1 of 2021. But of course, there are other growth sectors. Some other sectors too contributed. Agriculture happens to be one of them. Agriculture is still positive at about 2.28%, although I must emphasize, although it actually fell over 3% to about 2%, but it's still positive. Okay, the other sectors too that contributed, construction is one of them. Construction grew. The health sector too grew. Okay, just as you rightly mentioned, manufacturing sector also grew, and we also saw moderation, even though they're still in negative territory, but they are the negative performance, moderated. So one can also interpret that as growth. Okay, and that's on the back of the easing of lockdowns, easing of restrictions, we have in the economy. So accommodation sector, for example, moderated. We saw moderation in the education sector, in the financial services sector. So these ones moderated. But of course, we also recorded declines in some critical sectors like ICT. ICT and transport. And as a matter of fact, those were the sectors that helped to pull down the non-oil sector. Remember, non-oil sector actually went down. Okay, so but of course, Eko, that unfortunately our stock market in particular reflects this fact that we don't have the of these sectors fairly in the stock market. Look at the agri sector, for example. Agri sector that contributes about 22%, 24%, of GDP. Okay, if you come to the stock market, companies that are listed in the agri sector, there are very few, the likes of Presco and the Okumu Oil. So there are quite few, and their contribution, and their contribution to market cap is quite insignificant.
Yeah.
Okay, unlike the fact that that if you take ICT, for example, ICT too contributes quite a significant proportion of GDP. Not until recently that we had MTN and Airtel Africa. Okay, before it was also a challenge, but thank God at least MTN is there. But there are others too that need to come in.
So Prof, you just keyed me into my next question, which is the pro-growth focus of the MPC, which it says that this last MPC they looked at should they look at reining in inflation or continue with the pro-growth policy that sustains or supports the gradual recovery, and they have taken the pro-growth stance. What is the implication of this for the Nigerian capital market, this, as against reining in inflation?
Yeah, I think it's quite supportive. As you know, the performance of the markets in 2020 was largely driven by monetary policy, favorable monetary policy. The central bank introduced a lot of measures to ensure that there was liquidity in the system, including loan to deposit ratio, for example. In terms of monetary policy tools, you will recall that the central bank twice in 2020 had to reduce the benchmark policy rate. The monetary policy actually supported capital market growth in 2020. Yes, there were some measures by the central bank, including measures that were meant to ensure that there was more liquidity in the system, that credit was extended to the real sector at lower interest rates. Loan to deposit interest ratio, was one of them. And with respect to monetary policy tools, the reduction in monetary policy rates twice in 2020, the latest being the one of September, when it was reduced from 12.5 to 11.5. So all that helped to engender a low interest rate environment, which made equities attractive. So for money market instruments, yields fell, and because yields fell, naturally investors turned to equity. So that was what drove the markets last year. So, and continuing into 2021, we also saw the last time
monetary policy.
Yes, accommodative monetary policy. It has continued, and I think that is what the market requires to support it. But why it is not really having the desired effect now on the market is because of some of those things I mentioned.
Yes, sectoral distribution.
So investors are usually averse to high inflation rate because, of course, that eats into their return. Okay, so accommodative monetary policy will no doubt feed in positively, into the equities market, in particular. But as long as government continues to borrow, to compete with the private sector for funds, interest rates are going to go up. And once interest rates continue to go up, and you find yields. Your yield, of course, is interest rate on market price. So once yields begin to go up, there will always be rebalancing of portfolio in favor of fixed income securities. So you will also see that as interest rates continue to climb in the economy, that will have a negative impact on the equities market because, as you know, fixed income, particularly bonds, government securities, or even treasury bills are considered safer than equities. So pension funds, for example, would always want to play there, especially if yields are high. So they will move their funds from equities, to those other markets. So it's important that in the environment, promotes low interest rate environment. It will enable companies even access funds, and that will rub off on their bottom lines. Okay, they will access cheaper funds. It will rub off on their bottom lines positively, and of course on their share prices. And with interventions that the central bank, has been making, I expect that in the near future there should be increase in food output. And if we have increase in food output, food inflation will come down, because that is what's actually driving the inflation rate. Yes.
Okay. Prof, the major issue, and you've said it now, that the sectoral distribution in the market, a particular equities market, is not reflecting on the economy. So like you said, I mean, like oil and gas. And then there's this clarion call for leveraging the capital market for privatization and liberalization of like state enterprises. So recently we had the Bureau of Public Enterprise talking about the plans to leverage the market for the transmission company of Nigeria, to privatize it. That's an opportunity to leverage the market. And there's also the call for state oil company like the NNPC, Nigerian National Petroleum Corporation, and even the Nigerian Liquefied Natural Gas to leverage the market and of course list. So I know you've also been involved in advocacy around that. You've served as a finance commissioner before. What can be done more for states, subnationals, and their enterprises to leverage the capital market, even the federal ones? Because when you look at revenue too, it's challenging this period. You want to be creative.
Yes, I think that's stating the obvious. You see, anytime the government is in the domestic debt market, trying to borrow, okay, we often say that that usually has the effect of crowding out the private sector, okay? But yes, when the government comes to borrow from the domestic market, and that's why some people would argue that it's better for a government to take external loans, because if they continue to take loans from the domestic market, it crowds out the private sector. Now, there is that argument, no doubt. But of course, when the government is involved in the equities section of the market, okay, bringing companies to list on the exchange, for example, and trying to raise funds, through that, the government, that tends to crowd in. It crowds in the private sector, because what happens is, if people now see the government leading the way, okay, or if people see government corporations now being listed, imagine if there's a plan, for example, to list the Nigerian National Petroleum Company, or the refineries, or the other government establishments. That will give a lot of boost. It will increase the tempo of activities in the equities market. And usually, issuances, okay, attempts to raise funds succeed more when the market is bullish. So if you have a lot of activities in the equity space, other companies will also come, to take advantage of the bullish state of the market. So the government needs to lead the way, in my view, for primary market activity to gain traction. We have a number of government enterprises that need to be privatized. Such privatization should just not be outright sell to a few people. Okay, the best way to privatize is to encourage a lot of Nigerians to take active participation, and also see it as their own way of contributing to nation building. So you now bring those public corporations, you bring them to the market. Okay, you don't have to bring everything, just a small proportion of it, where people can also take some interest and say they are part of it. Okay, in Saudi Arabia, for example,
Saudi Aramco.
Aramco, yes. Is in the market. So those are the kinds of things one would like to see to propel to our capital markets, to be in a position to even contribute to the growth of the economy. So I was talking about the oil disproportionate representation. If the Nigeria's national oil company is listed, for example, of course that will change the narrative. Okay, we can now say this is an oil-dependent economy, and you can also see their presence, in the capital market. So it makes a lot of sense. And for me too, is also one way of ensuring, bringing about financial inclusion. Because once it happens, you find a lot more people showing interest in those government corporations, that are perceived to be doing well, okay, with prospects to do well. So people want to associate with such companies. Anybody want to associate with NMPC?
Yeah, definitely. I approve. I even take the last part of what you said. When Saudi Aramco listed on the Saudi exchange called the Tadawul, the market capitalization moved to $1 trillion. And you know that part of the dream of the Nigeria exchange is to be a $1 trillion market. So, I mean, when the government, like you said, leads the way in primary markets, we will achieve that. Things will start happening, and the market will grow in leaps and bounds. And that is a clear thesis for what has to happen going forward. And the advocacy will continue until government leads the way and crowds in the private sector so that others can come in. Let's wrap up with your outlook in just a minute. What's your outlook for growth in the second half of the year 2021, and how does this affect the trajectory of the capital markets?
The market, the weather is still cold for the market.
Yes.
Yes, and the cold weather is likely to continue for some time.
Okay.
Because of issues around macroeconomic instability that is being encouraged by insecurity. Okay, the insecurity needs to be properly tackled for investors to come into the country. All right. Okay, so as long as we have insecurity, it's going to affect the markets, affecting inflation rate, is affecting interest rate, is affecting virtually every economic fundamental. So that's addressing. I'm happy the government is addressing that, but it's not something that will disappear overnight. Okay, given its word that the government, the banditry, kidnapping, and so on, would be dealt with. So relying on those assurances, I want to believe that with time, these things will give, will be addressed. But as I said, they won't disappear overnight. So I want to think that the markets, a positive sentiment reflected, in the markets. And remember too, about that time, we expect to see company resolving in. So all that I expect to help the market, pick up.
Thank you very much, Professor Uche Uwaleke. You said the capital markets so far, even the second half of the year, may be in a cold weather. So we hope that when the exchange rate stability is really taking its effect, insecurity is addressed, and of course we are able to bring down inflation, that would be like a hot tea to calm the nerves of the markets. Thank you very much once again for the time. Professor Uche Uwaleke, Senior Lecturer at the National State University, KEFI, Abuja. Thank you very much for this very interesting conversation.
Thank you, Eko. Thank you.
And that'll be all for this edition of the Market Review. You can log on to our website, www.proshareng.com. And when you log on, you click on the right-hand side of the bar on Capital Market. You get all the latest developments in the capital market. If you have any questions, views, or comments around what we discussed today around the first quarter GDP results and implications for the capital market, send your views and comments to otuabasi.abasekong@proshareng.com, and we'll be glad to receive your comments and views. Don't forget this period that you need to stay safe. Thank you for watching. Have a nice day.